Kevin, thank you very much. It's a great honor to be here at the first of the year, Marine Money. Christos, thank you very much for taking time to join us in the conversation. It's been quite a morning of issues and opportunities, and I'm struck by the fact that shipping is in a better position now than in many ways has been in my memory. And we'll have a chance to talk about your success and what you see going next. I'd like to start with the numbers, if I may. 183 ships. Thank you. I'll repeat that for effect. 183 ships, $3 billion in assets, about less than $1.4 billion in debt and leases, $400 million in liquidity. You got $200 million of scheduled amortization in 2023 and nothing to be refinanced till 2024. You paid out $6.50 per share in dividends over the last 12 months. Wow.
128 vessels, Arlie. We're still not at 183, but we may get there. You never know.
Thank you for the correction. You can't rest on your laurels, although you must be tempted to after the tremendous run you've had. What are you going to be doing over the next 12 months? What's going to keep you busy?
Let's see. We just may sit back and relax, but that's highly unlikely. First of all, thank you for inviting me. It's a great pleasure being here. Thank you, Kevin. Thank you, Mia. Thank you, Matt, for arranging the Marine Money and gathering us all here in London. So 2023, indeed, after a very good 2021 and 2022, we have had the opportunity to essentially deleverage. We have had the opportunity to improve our financial strength. And looking into 2023, there are a few things that are priorities for us. First of all, we're going to focus on further reducing our interest cost and optimizing the debt structure wherever we can. We are always out looking for new sources of financing, so you may see us continuing the refinancing spree with a view of lowering even further our interest cost. Secondly, we're always evaluating M&A opportunities. Star Bulk has historically grown to where we are today by essentially acquiring fleets and using our shares as currency for those acquisitions. So if we can find such fleets that fit to the profile of our company, that essentially renew slightly our fleet, and we can use our shares as currency for the transaction, we will do so. And last but certainly not least, decarbonization is on the very top of our agenda. So we have a CapEx program essentially fitting energy-saving devices on board our vessels. We are looking into installing robot-controlled robots that essentially clean the hulls of our vessels. And on a more medium-term horizon, we're also looking into carbon capture. So all these will definitely occupy our time within 2023.
It's quite a diverse portfolio of activities. I gather you share the positive view of the dry bulk market that we've heard so far today, and we'll talk a little bit more about that. But let's talk about another aspect of the dry bulk market that you've hinted at, which is that it's a very volatile place to be. We've had Cape rates between $3,000 a day and more than $40,000 a day, bunker prices up to $700 a ton, I think. How is it you manage in that environment to deliver the consistent returns that your investors and shareholders expect?
If we are to be 100% honest, we are unable to deliver consistently high returns. I mean, at the end of the day, Star Bulk is viewed as a proxy to the spot dry bulk market. We do operate in the spot dry bulk market, and therefore our financial performance fluctuates with the freight markets. For example, in 2019 we had an EBITDA of 200 million. In 2021, our EBITDA was 900 million. And therefore, I mean, since 2021, we have distributed close to $1 billion of dividends simply because freight markets have always been high. However, there are certain factors specifically about Star Bulk that also protect us on the downside. Number one, our fleet is almost 100% scrubber fitted, and that means that our vessels generate a TCE premium between 2,000 to 7,000 per day, depending on where the spread between VLSFO and HSFO is. And therefore, when others that do not have scrubbers generate an X return, we generate this X return plus 2,000 to 7,000 TC per day. Then, historically, we have focused on being the lowest cost operator. We pride ourselves in essentially managing everything in-house and thereby having the lowest cost amongst our US-listed dry bulk operators as far as OPEX is concerned. And that's a difference of more than $1,000 per day, which again protects us on the downside. And third, as I mentioned, we are also focused on reducing our financing cost. And therefore, our average spread of below 200 basis points is probably the lowest amongst our US-listed peers. And therefore, the scrubber, the low cost on the OPEX side and the low cost on the financing side basically ensure that we can be profitable when some of our competitors are generating a loss in a tough freight environment.
If Star is a proxy for the dry bulk market, how do you find M&A opportunities? Where are the valuation differentials that you look to take advantage of?
So from 2018 and 2019, we essentially took advantage of the fact that certain private equity investors had acquired fleets back in 2013 or 2014 and essentially needed to exit. And in a mediocre freight market environment, it's essentially difficult to sell 15 or 20 vessels right away. And therefore, we provided liquidity by issuing shares to those players at net asset value or at a premium to net asset value, and thereby they were able to exit. I mean, we have created a big platform. We have the largest trading volumes amongst our dry bulk peers, and therefore, in circumstances when a seller wants to acquire immediate liquidity without having to sell asset by asset, if we like those assets, then we're definitely a good alternative for the sellers. I mean, also the fact that we have built credibility by having a board of institutional investors. In that board, we also have ship owners that were part of the syndicate of those selling fleets. That creates credibility, and that has allowed us to basically source and execute on such M&A deals.
We'll have a chance to talk a little bit more about your partnerships and how you've worked together with private equity in a moment. But let me ask you about China. We've heard it this morning. Everybody thinks China is a big positive. It's going to save the dry bulk industry and everything else, as it has done traditionally in the past. But there have been headlines that China has begun to shrink. Chinese population has begun to shrink. As you take a look at China, do you see any clouds on the horizon, anything you as Star Bulk are concerned about?
Medium to long term, China is definitely a concern. And the fact that China today is about 40% of dry bulk demand, it's a big player, and it's the elephant in the room. Therefore, China is definitely something that we focus on. China has been through a tough time. I mean, they have been through essentially COVID and very heavy lockdowns during 2022, which have impeded economical activity. Also, essentially since the first quarter of 2021, we've had a real estate recession in China, which hopefully has found a floor and is bouncing back. I think that China in the next sort of 5 years is not a source of major concern. If you have seen also, the Chinese went to essentially elongate the dates for which they will have steel emissions out of the steel industry as well as from the building materials industry. They extended those dates from 2025 to 2030. And therefore, I think that in the next sort of 5 to 6 years, economic growth is still a key priority for China, and therefore, potentially, the demand is not going to significantly slow down. Now, when it comes to 2025 to 2030, which is a century away for shipping terms, essentially, I believe that decarbonization is also going to save the day for the dry bulk industry. Because if you think about it, right now, the global fleet has an average age of about 12 years old. There are quite a few vessels that are over 15 or 20 years old of age. And as we move to 2025, the fleet, especially with the current rate of new building orders, is going to be significantly older than today. Therefore, a large part of the fleet will need to be phased out. And as supply improves, maybe with decreasing demand from China, dry bulk is going to be relatively okay.
Let's talk a little bit more about the environmental issues. And let's start with your Star Bulk motto, "Give me a ship and I will move the world." I think that's more than transportation. What does that motto mean to the company, and how do you operationalize it?
So our motto is essentially paraphrasing something that Archimedes, one of our ancient Greeks, said, "Give me a lever and I'll move the world." And it's a reference to our Greek roots, essentially, as Star Bulk. I mean, our aim and our vision is to be leaders in the dry bulk shipping in a sustainable way. And therefore, ESG is on top of our agenda. Now, when it comes specifically to environment, we have 3 pillars in our strategy. The first pillar has to be about minimizing the carbon footprint of a specific voyage. And as a result, we have invested heavily in telemetry, in vessel performance management, in order to minimize the carbon footprint of a specific trip, and in order to find the most optimal route and speed for a specific voyage. So that's pillar number 1. Pillar number 2 has to do with how we minimize the carbon footprint of our existing fleet. And this has to do, first of all, with investing, as I mentioned before, on energy-saving devices that essentially reduce consumption to the tune of 4 to 7%. We're also working together on the issuance of carbon credits out of those energy-saving devices, which is a further advantage to this whole process. We're also investing on maintaining our hulls clean, because clean hulls can make a tremendous difference on the consumption of a vessel. If a hull is not cleaned for a year after dry dock, consumption can increase up to 10%. If it's not cleaned for 2 years, it can increase up to 30%. So the difference there can be quite substantial. And then more medium term, we're also looking at how we will use our existing scrubbers in conjunction with carbon capture in order to further elongate the life of our vessels and minimize their carbon footprint. So that's pillar number 2. And then pillar number 3, we're talking about decarbonization using zero-emission fuels. And there, it's how we keep abreast of developments by being members in alliances and committing vessels and time in essentially experiments about what can work for zero-carbon fuels. We're active members in the Global Maritime Forum. We're active members in the Getting to Zero Coalition. Out of the Getting to Zero Coalition, we're active members on a Green Corridors project between Australia and Japan, which will utilize green ammonia vessels. And we constantly essentially thrive to be abreast of developments and be in the various forums in order for us to see what the fuel of the future is going to be. And right now, we're probably fuel agnostic about what this fuel is going to be.
The previous panel highlighted the need for regulatory leadership, if I could put it that way, or at least consistency. It sounds like at STAR, you're taking a different strategy. You're trying to be a leader and be an innovator and create change in the industry. Why have you taken up that mantle?
I think it's important that big players in our industry take a leading role in decarbonization. But you touched on something crucial here, that when it comes to zero carbon fuels, there have to be also the regulatory framework and the right incentives for all the players in the industry in order for us to adopt them and make the necessary investments to proceed forward. For example, when it came to scrubbers, the payback was pretty clear because essentially we're reducing consumption and we had a certain payback of our investment. When we're talking about carbon capture, or when we're talking about investing in vessels that emit zero carbon fuels, the regulatory environment should help us in giving us incentives in order to use these fuels. And those incentives are either in the form of a carbon tax, are either in the form of subsidies, or are in the form of a transfer system in which essentially we find a way from us to the cargo owner and at the end of the chain to the consumer of how you can essentially pass this cost in order for people to be incentivized to invest in new technology.
2 minutes is hardly enough to talk about the Starbucks success story.
No.
Well, let me ask you specifically about the scrubber investments that you've made. It was a controversial and certainly widely discussed investment. How much money did you put into it? What kind of profitability have your investors seen as a result of that decision?
I don't know how controversial it was, given that it was sort of sponsored by IMO as one of the solutions back then. But essentially, we took the decision to scrubber fit our entire fleet. That was a big project at the time, involving various shipyards and various riding teams in the globe back in 2019. The total cost of the investment, as we have made public, including the off-hire cost for our vessels installing those scrubbers, was at $250 million. We essentially repaid back the investment in June of 2022, therefore effectively in 2.5 years. And essentially since then, everything accumulates to the operating cash flow and essentially is giving out as dividends to our shareholders. Here it's also important to underline that aside from the investment side, we have built an organization around the scrubbers. So we have a specific team that works for the maintenance and performance of those scrubbers. And it's because of this organization that we have ensured that our scrubbers, in the 3 years that we operate them, we have had 98% availability in days for use of those scrubbers. So it's not enough to just install the scrubber. You need to have the organization to follow up on the performance of those.
You make a really strong point here. It's not just ships, it's not just the fuel, it's the people. You've been with STAR for 10 years. What have you learned in that 10 years?
It's difficult to summarize it in just a few sentences. But I think one of the greatest lessons, I guess, in shipping is that, and what the Greeks preach essentially, is that it's so important to invest in assets at the low point of the cycle. It's so important to buy cheaply assets and then have the financial ability to essentially support those investments until the market turns. We are lucky to essentially enjoy markets with very high volatility. But the market at some point turns because at the end of the day, we're affected by macro events that cannot be predicted in advance. So buying cheaply and having the financial strength in order to support those investments, in order to see the good days of a good freight environment, is just so crucial in shipping.
Christos, thank you so much for your time today. I know there are 350 people here who are interested in more conversation with you. Will you be around later today and able to answer questions?
Absolutely. Thank you so much for having me, Arlie.
Thank you. Thank you, Kevin.
Thank you, Arlie. Thank you, Christo. Okay, we're going to have a break, 25, 30 minutes. We'll reconvene around about 12:30, please. Thank you.